Pasha Pyro, YNet7, thank you for tuning. The replay. So, I know some of y'all already know earlier in September, FHFA says all good till, earlier this month in June, right? The FHFA says it's all good until September on loans, mortgages, right? Now, quietly, possibly to some, AltiSource, which is a company we talked about here in some videos back last year, go check those videos out to get a full briefing on ASPS, which is a good opportunity for more detail. Check out those videos on YNet7. I'll put a link up here somewhere maybe. Now, AltiSource gets $42 million in credit. Okay. Now, we've been watching this for a while now. It's going up, it's going down. So it got up as high as $15 and change, I think, and it hit as low as $6. A good part of what they do has to do with processing, or at least in the 2008 crisis, right? A large chunk of what they did deals with handling foreclosures for various creditors. So in 2008, the long story short is their stock went, or actually in 2009-10, their stock actually went from about $10 a share to $140 a share because of the overwhelming product or services they were rendering at that time for the established creditors primarily. So with the conditions as a Kinderbox favorable for a repeat, when this whole foreclosure situation, forbearance started, it's actually shows the potential to definitely have some sort of surge in value once all this comes to a head. Now, we've been doing some other videos recently where we talked about that the way everything is lining up, it's going to present an opportunity for, let's just say, mega money holders, right? Whether that's a hedge fund or an investment firm or group, or just, a billionaire, trillionaire out there somewhere, right? Point is, it's going to create a great opportunity for them to come in and buy up large percentages of U.S. real estate and turn it into an investment group, whether that's most likely for the long term. What would make the most sense is to own it all and just rent it out, right? So that would create a situation where they would maximize profit. So let's take a look at how I'm looking at this possibility and tell me what you think in the comments below. So FHFA extends the 19 multifamily forbearance through September 30th, right? Now, what I caught here is it says, first of all, the FHFA is the Federal Housing Finance Agency. Okay. Now, the headline says FHFA extends multifamily forbearance through September 30th. I'm reading this as the way it's worded here says today. This was earlier this month, June 3rd. So at that day, the Federal Housing Finance Agency announced that Fannie Mae and Freddie Mac, in parentheses, the enterprises, right? They will continue to offer forbearance to qualifying multifamily property owners through September 30th. So for me, I'm not gonna say it's misleading, but it's definitely not applying to everyone, because the FHFA is stating that Fannie Mae and Freddie Mac, right? which they were really close to having a monopoly at one point, but they don't actually have a complete monopoly. So there's still going to be some people that could see that ending at the end of this month. So feel free to stop by this page here. It's the Federal Housing Finance Agency website, and check out this article. What that made me wonder was what actually, what percentage, right? What part of the total housing situation, market, real estate percentage total in the U.S. does Freddie and Fannie actually own? You know what I mean? Let's start to get some light on what the actual that article is saying. And what we got here is, I skipped down through this article a little bit to find this bullet point here. And it says, today, the housing industry is keeping a watchful eye on the situation and how it could impact Fannie and Freddie and the 28 million homeowners that have a mortgage backed by them. So 28 million homeowners have a Freddie or Fannie mortgage or backed mortgage. I'm not saying, if you don't feel comfortable, that's cool. But if you got one that is backed by F&F, let us know in the comments below. So that's 28 million homeowners, right? And go to the top of this, just let you know this Investopedia, and it gives you the overview on Fannie Mae and Freddie Mac, right? Lots of information here. Here's where you can see they entities virtually monopolized the secondary mortgage market until the 1990s. So it tells you everything you need to know about the bailouts. Everything's right here, right? But as of right now, to make it real simple for the target point information we're looking at today, they have 28 million mortgages that they're backing, okay? Now, what I want you to take a look at is, again, if you're not familiar with the company AltiSource, then go ahead and hop back over to the White at 7 channel, subscribe, and click the notification bell so you get all the content. And then also, drop a comment. I mean, really, I'm not charging you for this. We're having fun. We're building with each other. So like, comment, subscribe. It really helps the channel out. Put more people like you in a position where they can benefit from these conversations. So go back and watch AltiSource's video so you get the full scoop on it. But here's what they did. This is what it looks like for them in the last 2 days. Okay? So what we got going on is, you can see here, which was just the 22nd, all right? We were in the mid $6 range. So me, I hopped out like once it crossed below $10 and kind of just been watching it, and it's been on a decline, all right? But it had this spur of life, and I think it's much bigger. We've been waiting for the sign, so to speak, with this, right? So I think this is a good sign. Not to promise you, because this has been a huge delay because they've been doing a forbearance. So everything that I started looking at this for at the beginning of, like late third quarter 2020, right, has been delayed, which is a gift and a curse, because it's just gonna make when it gets pulled out, or when the change happens, it's gonna make it probably more intense because it's been longer, possibly. All right, so that could be great for the investment side. A lot of people, as you can see, are waiting for it, hedge funds included, right? So what actually occurred for them is they made an announcement. As you can see, we're up 15% for the day, and it was basically like another 15 or 18% yesterday. So you were probably talking a total of maybe 30% for the 2 days. Give me a second here. Excuse me. Put this on the screen for you. Yeah. So here. Let me show you. So if I use Google, right? Here you go. They're up roughly 30% in the 5-day window, and you can see the bulk of that surge happening yesterday and today. Now, let's take a look at why, right? So here's their website. Again, go to you start here and look into into exploring them yourself. Check out the videos I did on AltiSource. But here's all the services they offer. And this is kind of surprising because only like one part of this is directly related to managing foreclosures. I ain't gonna say one part, but there's a percentage of this that's related to that. But they offer a ton of services dealing in the real estate market, which is gonna have a huge surge in activity one way or another. Whether it's people going through foreclosure, people getting their possibly loans forgiven. I mean, look at the situations like California where they're deciding to pay everybody's delinquencies that are behind. And, congratulations to the people that maintain their payments. And, if you're able to do that, and if you didn't pay and you're just, in that situation, this is a good relief for you. And it also helps the landlords not go belly up if they haven't already. So, but there's going to be a lot of activity, right? And all these services probably are going to benefit from them. But let's take a look at this in particular here. So AltiSource announced back on May 10th, announced the first quarter financials, right? And what I want to look at here is they ended the first quarter with $41.3 million of cash and cash equivalents, right? And they also ended the first quarter with $205.9 million in net debt. So they have some cash on hand, okay? And here's why I'm really looking at this as a nice move, because what they did was, let's go to this right here. AltiSource signs revolving line of credit agreement. Okay, so basically what they're getting is a total of 42. So through June 22nd up to 15 million and up to 10 million to end the term. The credit agreement provides AltiSource the ability to borrow up to $20 million through June 22nd, 2020. So basically the next year they can put on credit $20 million and up to 15 million through 2023, right? And then another 10 million up until the end of term. Okay, so 20, 15, 35, 10, that's 45. The first article I read said 42, but this is their own report, so we'll go with 45. Okay. Maybe there's a gap or something, but if not, they got 45. Now here's why I say this is really, really a good sign from an investment standpoint. As you can see, if we go back to the chart, the announcement was made, and literally right after that is when the stock, napalmed, right? It got up to today earlier so far $9 and actually 35 cents, as you see over here is the official high, and it has some reduction since. It's bouncing around a little bit. I wouldn't expect nothing less on a Friday afternoon. So what I think this is setting the stage for, and let me know in the comments below what you think, because the volume over here, the volume today is 445,000. The average volume is 214,000. I like that, and I like the fact that that's going to create some stability. Especially, it shows that a lot more eyes are in this, and it just makes it easier to not get caught, out there. And it's not like they're doing $1 million yet. I mean, millions of shares a day right now, but they're on their way to 500,000. So as this news get out and more people catch on to this, they're going to probably want to start dumping into it. So this may be a good situation for you to look at and do your own research for entertainment purposes. I'm not an advisor or a professional or any of that stuff. This is not advice. If you would like advice, please seek a competent title that can deliver you advice. So we went up from basically $6.50 to at the high $9.35. So it went up $3 in basically the last 24 hours, and that's great. Now, what's interesting is that I think that's going to, if we go back to the video we made the other day, and we were talking about how the big money is waiting for the opportunity to come in and buy up a bunch of the houses, like a bunch of the market. Like, what if you were a company and you wound up owning 25% of the real estate in America? What kind of fucking, strength does that do for your portfolio and your networking when you own 25% of the whole country? So, situations like this, not to say that'll be the outcome, but it presents the opportunity closer than ever, probably in history, right? We're already surpassing 2008 conditions and climates, so we could expect to see something. We may not see it ourselves or know that we're seeing it, but we can expect that something like that is probably going to be on the table for the smart money and the big smart money. So what that made me want to know, just to give you a little preview, the total, I was just curious, so I looked it up, and the total mortgage balances in the United States are at $10.04 trillion as of fourth quarter 2022 or 2020, right? So housing debt has now eclipsed 2008 levels, and serious delinquencies dropped from fourth quarter 2019. Now, that statement here, I don't know if I can trust it, because is it that they actually dropped, or is it that the forbearance is affecting the reporting? A lot of places just stopped even reporting because it was nothing that they could do anyway, so they kept it to I don't know, possibly, you know what I'm saying? So no need to report it until it means something. You got the record, but maybe you're not reporting it. How's that being calculated? Stuff like that. So, but serious delinquencies dropped. They're saying that may be misleading, because at the same time, at the beginning of the statement, I just, like the words, it's saying that housing debt has now eclipsed the 2008 levels. So once we eclipse 2008 levels and have serious delinquencies at all, I'm looking at that as it's an opportunity for things to happen, positive and negative. So the fact that they dropped, it don't say by how much or how it could have went down 1%, and they could write it as, it's dropped, but 1% ain't shit when it went up 35% last year, for example. Not that these numbers are factual that I just gave you, but it gives you the visualization for why I don't like that comment too much. But why I feel that it's relevant. So take a look at that and let me know what you guys think. Definitely look at ASPS, AltiSource. So let me see here. What was it here? I had one other thing here. Oh. So this is related to that total American debt, right? So American debt, mortgage debt reaches 10.4 trillion in Q4 2020. So that number is relative as of 6 months ago, So what we can look at is the total mortgage balances in the U.S., 10.04 trillion. Housing debt eclipsed 2008 levels. Serious delinquencies dropped from fourth quarter. Increasing regulations help keep the economy in check. So, see, that and that, it kind of doesn't tell you why or how. right? And if we go down to here, even better, the percent of serious delinquency mortgages, those with no payments in 90 days or more, to improve, albeit slightly. You see what I'm saying? So after home equity debt, mortgage debt has the lowest delinquency rate of any type of household debt. The flow of mortgages into serious delinquency was 0.6% in Q4 compared to so it went down 0.5%, right? But we did a video a while ago, and the research I did in that showed that they were given numbers. Go check that video out. It may have been an AltiSource video, or it may have been something doing with the housing. Check them out. But they gave the numbers, and they were like, yeah, it's this is the percentage, but that percentage doesn't include the 80% that would be on the books if they weren't on forbearance. So it was like they were giving numbers, but they were taking out the fact of the forbearance situation from those numbers, and that was kind of like making it sound okay and palatable, but it was really, really hiding the true crisis of the situation, so to speak. So stuff like that, statistics can be used to make any point you want, right? So mortgage debt is the largest component of total household debt, which rose $206 billion to reach the all-time high of $14.56 trillion. Mortgage balances make up 69% of that, and I guess that's where they get the 10.04 from, all right? So what they're saying about the mortgage rates is mortgage rates are at some of their lowest points, according to Kiplinger, and the 30-year fix dropped down to 2.7%. Like they're just giving money away, and or at least they were. So which is the lowest ever since Freddie Mac, and start surveying the rates. So if you locked in a rate by now, you may see an increase, but not by much. All right. So, but the fact, this right here is a hook. So if you locked in a rate by now, you may see an increase. Or if you haven't locked in a rate by now, you may see an increase, right? So definitely don't want to be in one of those situations where you have that moving APR. If you're getting a house, you want to make sure you got a locked in a fixed rate and do your thing, all right? But the group suggests that the 10-year treasury rate, that we're not even gonna worry about that right now. So basically, that's what you got going on here. Take a look at this information. Let me know what you think in the comments below. Definitely take a look at AltiSource. We're back up to 907. So it's sitting in at $1.30 for the day per share. For sure. I'm Pasha Paro, YNet7. Thank you for tuning. The replay.